Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So this video is the next installment in the Guru Investor series that I've been doing on the channel, all about taking one of my favorite investors each video and giving you my top 3 lessons from that particular person. Now, this video is about the big one. It's about Warren Buffett. He is probably the greatest investor of all time. He's certainly regarded as the greatest investor alive today. He's someone that took himself from basically nothing when he bought his first stock at 12 years old in the early 1940s, right through to being one of the richest people in the world, even after giving away tens of billions of dollars at this point. So every time Warren Buffett writes a letter or speaks, he gives away nuggets of wisdom. So it was really hard for me to try and narrow it down to my top 3 investment ideas or investment lessons that I've picked up from Warren Buffett. But I've done my best. I'm sure I'll miss plenty of nuggets of wisdom that he's given over the years. But here are my top 3. So let's get straight into it, and I hope you enjoy the video. Now, the first lesson from Warren Buffett is that compounding works. Warren Buffett is a classic example of the power of compounding your wealth over a long period of time in order to get to exponentially higher levels. So if you look right back to when Warren Buffett bought his first stock at 12 years old in 1942, he's come a very long way from there. So he didn't become a millionaire until he was 30 years old. He didn't become a billionaire until he was around 50 years old, and he's become a multi-billionaire in the years since that, the additional probably 40 years almost at this point, now that he's coming up on 90 years old. And I'll put up a chart of his net worth just so you can see that visually. And what you'll notice is that there's really not ever been a massive spike. He never went from zero or maybe a few $1,000,000 right up to multi-billions. It was a steady sort of exponential climb as he just kept doubling and doubling and doubling and doubling every few years and compounding his net worth over a long period of time. And this is one of the core lessons that Warren Buffett has passed on to me. Even if I cannot become the best investor on the planet or anywhere near it, it's very helpful to know that even if I can get reasonable returns, compounding will do its thing for me over a long period of time. You can put numbers into compound interest calculators and see this for yourself. And although compounding isn't particularly exciting in the early years, the longer you go and the later you go through your investment career, the more powerful the compounding gets. So compounding is simply the idea of interest on interest on interest on interest on interest. It's kind of this snowball effect that magically grows your wealth exponentially. If you make an investment with $1,000 when you're first getting started and you make 10% on that, then after 1 year you have $1,100. You have your initial $1,000 plus $100 in gains, whether that's capital gains or dividends that maybe you've reinvested. After year 2, if you make 10% again, you again get that $100, but you also earn 10% on your new $100 that you picked up after your first year. So you actually start to earn a little bit more every single year, and over time this thing snowballs out of control. And it gets to the point where if you look at your end kind of number, where you end up at in 20 or 30 or 40 years or however long you've got to invest, your initial principal and your initial contributions become a smaller and smaller percentage of what you end up with at the end. What you end up with at the end is simply all those gains compounded over time. You have interest on interest on interest on interest on interest over a very long period of time, and that is really the formula to getting ahead. So compounding is absolutely my #1 lesson ever from Warren Buffett. It works. Take advantage of the maths, contribute to your compounding engine as often as you can and as early as you can for as long as you can. Now, my second lesson from Warren Buffett is to wait for a fat pitch. Now, you've got to be careful how you pronounce that, but basically what Warren Buffett is referring to here is great investment opportunities don't come along all that often. What he's really looking for is something that is squarely in his circle of competence, that he understands extremely well, and something that he can put a lot of money into with a lot of confidence, a lot of conviction, knowing that there's not a lot of risk of downside, but he can capture a lot of upside and now especially in the last couple of decades at Berkshire Hathaway, he's really looking for businesses that he can also hold for a long period of time. So he's looking for extremely high quality companies that he can put into his portfolio, basically buy, and then the job is near enough done. He's obviously going to keep on top of what's happening with that particular business. He does sell every now and then, but really he wants to buy a business that he can hold forever, and he wants to buy it at an attractive enough price to limit his downside, which allows him to put a larger and larger percentage of his portfolio into it. Now, every day, Mr. Market presents thousands and thousands of stocks, thousands and thousands of individual companies, as you should be thinking about it, at various different price points. And basically what Warren Buffett is saying here with waiting for a perfect pitch is to wait for the perfect business for you. You do not have to understand every single company. You don't have to own every single stock. If you see your neighbor that owns a stock that goes up 5 or 10x over a short period of time, that is not necessarily a bad thing for you. You know, good on your neighbor for doing that, but you don't have to win them all, and you certainly shouldn't be reaching for pitches and companies that are outside of your perfect kind of hitting zone. What you want to do is wait for the perfect company at the perfect price, a business that you understand just as well as you might understand buying maybe the property next door to you as a rental, and being able to have enough conviction to know that if you put your hard-earned money into that particular business, it's going to do well over time, you're going to have limited downside, and you're going to sleep well at night, essentially. So that's my second tip from Warren Buffett, is to wait for the perfect pitch. Great businesses don't come along all that often, but when they do come along, you need to swing big, swing for the fences, and put a lot of money into that best idea. Now, the third lesson from Warren Buffett is that you can't do a good deal with bad people. And I think Warren Buffett's sort of people management is really an underappreciated aspect of what he does over at Berkshire Hathaway. He set up his business in a way where he basically has to do almost nothing in terms of the operating businesses, and it's allowed him to free up basically as much time as he possibly can in order to continue to look into new investments. So if you're not familiar with how that model works at Berkshire Hathaway, which is the company that Warren Buffett has a large ownership percentage in, and it's the vehicle that he's sort of used to build over time. Basically what Buffett does is he owns something like 70 or 80 businesses entirely. And basically each of those businesses are out there just sort of leading their own lives. Warren Buffett doesn't give them a particularly large level of guidance other than don't do anything that would harm the name of Berkshire Hathaway. And when you make money, send the money to Omaha, and Warren Buffett will redistribute that into new businesses and new investments. And although Berkshire Hathaway employs tens, if not hundreds of thousands of people at this point, at their headquarters, they only have a team of about 30. And it's because Warren Buffett is able to recruit really, really high quality people that can largely run their own businesses without any guidance from Warren Buffett. And they can do it a whole lot better than Warren Buffett could. And what Buffett famously says that he looks for in a business manager is a combination of talent, integrity, and energy. And if he were to make any of those compulsory, it would be integrity. What you don't want is someone with energy and no integrity and a lot of talent, because that is the type of person that can potentially screw you over in a business deal and just not be a shareholder friendly manager of a particular company. So what he's really looking for is integrity and energy. Talent is sort of a third requirement for him, even though it's obviously very important when you've got people running very, very large businesses. So those are my top 3 lessons from Warren Buffett. The first one is that compounding works. The second one is that you have to wait for the fat pitch in investing. And the third one is that you can't make a good deal with bad people. Now, I thought it would be useful to just spend a couple of minutes maybe talking through some real world examples from my own investing experience as sort of an ode to these lessons from Warren Buffett. Just giving you some perspective from my end on how these things have changed my life, really. So the first one, in terms of a compounding engine, basically what I did to put this firmly into my brain, because I do like sort of mathematics and playing these sort of games with numbers. Basically, I went to a compound interest calculator, and if this is something that you haven't already done before, I highly recommend doing it, because for me at least, it was extremely motivating. It was something that clicked with me really instantly, basically, when I went on to a compound interest calculator and basically just ran some numbers. So I recommend you go on there and plug in what you're currently starting with in terms of investment capital, whether that's a substantial amount of money or whether it's closer to zero, whatever you're starting out with, go in there and put that in. Secondly, put in how much money you think you can save each year. And thirdly, just start out with a market rate of return, maybe 7 or 8 or 9%, somewhere in that range, and just have a look at the period of time over which you've still got to invest before retirement and see what kind of numbers come out. And for me, when I first did this, frankly, I was blown away with the size of the numbers that were coming out. And then when I started to think about, okay, what happens if I can save a little bit more money or create an additional income source, or, study investments, put more time towards studying investments and potentially get even just a 1 or 2 or 3% higher return over my investing lifetime. And each of those variables being adjusted, upwards, did really powerful things in terms of compounding that end number in a compounding calculator. So that frankly has been extremely motivating, as odd as it sounds, or as nerdy as that might sound. That's been extremely motivating for me. It's really been one of the core lessons that I've taken on board in terms of running my financial life. And it doesn't just apply to finances, it applies to this YouTube channel. I spent 6 months putting up sort of 2 videos a week, and after those 6 months I had 100 subscribers. The following 6 months after that, I think I was closer to 1,000, and now it's been about probably 9 or 10 months since that, and we're at about 13,000. It's another classic example of compounding growth and continuing to just chip away and chip away and chip away at a particular goal. Now, the second one, in terms of waiting for a fat pitch, this is something that I think I've been pretty disciplined at personally, and I've really done that by using another one of Warren Buffett's analogies around a punch card that only has 20 holes in it. Every time you make an investment, you have to punch a hole out of that particular card, and basically what it does is it restricts you to thinking really long and hard before you make a particular investment. And basically what I've done at the start of each year for the last couple of years is I've said, if I can make 1 or 2 good investments throughout this year, over time that's going to continue to add to a lot of high quality decisions over a long period of time. So that's the way that I've sort of interpreted that advice from Warren Buffett, and it's been really good in terms of keeping me away from high flyers that would just be frankly undisciplined investments from me, and it keeps me away from sort of dabbling in businesses. I guess looking at a company that maybe I see pop up in a 13F or something and just adding a little small position, or not doing all of the work before making an investment. It really takes me back a step, take a high level view, and really dive in and understand the company as well as I possibly can, understand the valuation, the margin of safety, the downside, the upside, all those sorts of things before making an investment decision. And the third lesson, in terms of you can't make a good deal with bad people, frankly, I don't have too much to add here. But what I will say is, again, through this whole YouTube thing, I've met some fantastic people. It's been great to interact with all of you down in the comments section, and it's been great to collaborate with some of the channels that I have worked with before. And I will say there's a lot of great people out there to work with in this whole finance space. So I don't have too much to add in terms of actual business transactions or anything on that particular one. But those are my 3 lessons from Warren Buffett, and I thought just because he's been such a massive influence, it would be nice to share my personal perspective on how he's helped me out as well. So I hope you enjoyed the video. If you did, please hit like and hit subscribe. I would love to hear from you guys as well, how Warren Buffett perhaps has shaped your investment lifetime, or your life in general. I suppose we get a bit philosophical here sometimes. I'd love to hear that down in the comments, so please drop that down below. But that's all from me today. If you want to watch some older videos, you can do so over there. You can hit subscribe over there if you haven't already. Otherwise, I hope you have a great day, and I will see you in the next one. Cheers.